what has to be noted is that each asset class stands on its own 2 feet. From an office perspective, I think valuations will stay stable between now and the end of the year. There may be a band of 2 or 3% either way from the 2 recent trades, but I think it's stable, if not slightly growing. From a retail perspective, I think things also will be stable, although we may see up to 25 basis points increase in yield to the investor. Industrial's on fire. If there's upside in any marketplace, it's probably going to be industrial, and that is because the investor anticipates that on rent renewal, the rate will grow greatly. And I guess the one market that could have some diminution in value is the residential market. Not investment in multifamily apartments, but investment in single-family residential, particularly on the high end of the market. Multifamily apartments is going to be very, very strong because still, even with the decline in residential values of condos and single-family homes, it's still difficult for people to get in the market. And because of that, I think the vacancy rate in Vancouver will be still less than 1% moving forward, and a very stable pricing environment.
I would say valuations are likely in the commercial side to be quite stable over the next 12 months. There's definitely an adjustment going on in the residential ownership market, one that really started in the single family market and has trickled down into the condominium market. The cap rates are likely to be pretty stable, we think, and our house view on interest rates at this point is that we're taking a bit of a pause and we're unlikely to see large increases in interest rates through towards the end of the year, and then maybe we start to see an upward adjustment as we roll over towards 2020.
The Vancouver market still has a ways to go from a valuation perspective for the simple reason that it's always had a couple things going for it. It's always been supply constrained and it's always had great liquidity. And we've heard a little bit about that today because of the capital inflows to Vancouver exceed almost everywhere else in Canada except for maybe Toronto. And Toronto is quite a bigger market, but it's interesting. Foreign capital plays a much bigger part in Vancouver. And I would say to you, liquidity is a very important factor in valuations. So people believe there's actually even more liquidity in Vancouver than there is in Toronto. So from that perspective, I still feel very bullish. The thing that's changed Vancouver in the last little while really has been the demand on the tenant side. It's really been a small tenant market, and all of a sudden with the advent of technology companies, growth is really taking off. And the real question from a valuation perspective is that growth going to maintain this pace or is it going to slow down? My personal feeling is it can't continue at this pace, but it's still got a little ways to go. So valuation is a combination of yield, going in yield, terminal cap rate, and also income growth. And I think at this point, there's still the yields and the terminal cap rate, they're probably going to be flat. I think this year's tested Vancouver's yields. People tried to sell assets at 2, 2.5%, 3%, and they're getting resistance, which probably they should. But that income growth is still there. It's just not going to be as high as it was for the last few years. As far as the cycle is concerned, the analogy is, and it was used this morning, usually is a baseball analogy. I did not want to use a baseball analogy. So I'm thinking, okay, you could use overtime in football or hockey or basketball. Didn't really want to use that analogy either. So I was trying to think of another sports analogy since I'm a sports guy. And I thought, and I'm not a runner, but I'm going to use the analogy of a runner. And it's like a long distance runner who keeps setting new record marks for distance. And whether it's because he trains better, the background's better, he's got headphones that motivate him, that's technology's better, he continues to reach that outdistance point that he's never reached before. And I still think he's got a room to go. But what's going to happen, like it always happens, he's going to get the odd injury. He may break down once in a while. He may step back a little bit before he keeps going on that record-breaking pace. So if you want to use that analogy, it's something different. I think he's almost there. He's almost to the max. but there may be things that can make him go faster and longer for a little longer, but it's not going to be a straight line.
Okay, so first of all, Vancouver's never fully valued. It goes up and then it maybe flattens out a bit when there's a period of discombobulation of the market, and then it goes up again. The reason for that is people move here. Industries move here, businesses move here, and individuals and families move here because it's a really nice place. It's a very constrained supply, and so values will always kind of go up. In terms of 2019, the residential market is in a state of discombobulation. Prices got very high, there's an affordability issue, there's a lot of government intervention and policies at the provincial level, the civic level, and even the federal level with the stress test, which has caused a pause and has caused some of the higher priced elements in that market to moderate somewhat. And I think that's being misinterpreted as some big correction, which I don't think it is. In terms of the other asset classes, office, industrial, retail, I think there's still upward pressure on rents, depending on the location, but pretty much in the supply-constrained Lower Mainland, Metro Vancouver, there's really not much anywhere. So I see office rents going up, I see industrial rents going up, and I see retail rents going up. Retail income streams aren't as valuable now as they were a couple of years ago because of the fear from technology and the change in retail and consumer habits, so there may be some downward pressure there, but that's not unique to Vancouver, that's across the entire western of civilization.